Hey, what's good, YouTube? Welcome back to the Stock Hustle channel with your boy William for today, September 20th, Monday. And as you guys can clearly see from this indices chart, it was a bloody day. Bloody day. Yeah, a lot of people today are not very happy with their portfolios. If you've been looking at your portfolio and if you were long on any positions outside of the plays, like for example, AMC or GME, where you've been in those plays for really long periods of time and you had a nice cushion already built up, more than likely anything else you've been playing recently is down today. And please don't take it the wrong way, but it is just a paper loss, right? And I don't try to downplay that or make it seem less. But in the stock market, guys, when you are trading, you will find yourself in positions sometimes where you will have paper losses or showing your account essentially in red. It's not necessarily a true loss until you choose to sell at that loss. Because again, you always have to remember, giving yourself time, in a week, in a month, 3 months, 2 months, 6 months, those positions could go back into green, and now you're selling for a positive or for a gain, or acquiring alpha, as they say, right? So you got to take it with a grain of salt. You're not necessarily down, you're just down right now. But again, there are ways you can play that or leverage that to put yourself in better positions moving forward for next time. If you're a new trader especially and you've never been through something like this, I know this can seem like, what in the hell is going on? Like, it just seems like dysfunction, right? But that's why I always try to preach to you guys on my videos. You don't trade with emotions. You control your emotions so you don't make impulsive decisions or make a decision you can later come back and regret. Because again, all the upper 1% or all the major players that have the majority positions in the stock market, they clearly trade on fear, as we can see clearly from this chart. The second something goes foul or the second something goes wrong, they're the first ones to sell and pull their money out. Why? Because they trade on fear. They run on fear. They live on it. And honestly, if you look at the bigger picture of what this is, we should all be happy this is happening now, right? Why? Because if you have any kind of money on the side or any kind of dry powder, as they say, or as other YouTubers like to call it, which is just another word for money, this is your buying opportunity. This is your dip you've been waiting on to get some blue chip stocks at great deals that you can then ride at the low or on the floors and ride those all the way to the moon and beyond, right? So what is all this about, or why is this all happening? Well, remember, if you guys have seen my videos from over the weekend, I told you guys about this Evergrande thing that's happening out of China. Essentially, it's one of the biggest property managers or biggest, I guess, property builders out of China, who is essentially going to default on their debt, right? How much is their debt? It's $300 billion debt, right? They are essentially going to default. At this point, I heard stories this morning where they were saying something to the nature of they're giving away properties for free to pay off their debt or settle their debt, which obviously, if you lend someone money and they came back and said, oh, you know what? I'm going to get you some shoes and cover that debt. That's not going to make it right? That's going to anger people. It's going to make people mad. Furthermore, to make matters even worse, a lot of American companies are share or stakeholders in Evergrande and have pretty substantial positions. I had heard an article or heard someone say in an interview today that Wynn Las Vegas, Cleveland Cliffs, for example, Wynn Macau also had positions or stakes in Evergrande. Obviously, now that's dumping over into the U.S. markets, and then you have this, right? So what is this? This is the SPY, right? And if you have ever been in the stock market for a little while, I'm pretty sure you've seen people play the SPY either on calls or puts. Matter of fact, I wish I would have played puts on the SPY, and I'll explain why. But the SPY is basically an index, right? It's an index fund of the top 500 companies in the United States, right? So this essentially has a little piece of each company. As those major companies go up, the SPY goes up. Well, anytime that the SPY pulls back, depending on how much it pulls back, it can freak a lot of investors out. Why? Because you're talking about a significant amount of money pulling back. It's not just pennies, and it's not little companies who, are not as important. These are like Tesla, like Microsoft, like Apple, like these big names, right? So it spooks a lot of the institutional money, or the smart money as they like to call themselves, if you ask me. But again, don't ask me. I have mixed opinions. But essentially what has happened is, as of Friday, we started pulling back, right? And then as you see today, we pulled back a significant amount. We broke this nice little support or trend line that we had that you could literally draw all the way from the COVID March 2020 that I've pointed out on charts before, all the way through. We've respected that trend line. Look, perfectly on candles. Perfect. And then now we have broken through. Looking at the 1 year, 1 day chart, we've broken significantly. The green line is the 50-day moving average. The yellow line is the 100-day moving average. And as you can see, we have literally broken below it. We're literally sitting on it or bouncing on it. Essentially, tomorrow will dictate what will happen at that point moving forward. So because when things like this happen, big money gets spooked, so they pull their money out, right? And sometimes it can leave retail investors like us, me, you, and everybody else who invest in the market holding bags, right? It's not a bad thing. It's just something you need to plan for and prep for. If you're new to the market and you've never been trading before, now you know. These type of things happen, but we need these things because stocks cannot always just climb straight up. They have to have pullbacks. Why? Because if you don't have a pullback, then it doesn't give you an opportunity to buy in. All these red pullbacks you see on this chart, these are opportunities to buy in and throw your money in because you're getting it at a better rate. If every stock only went straight up, everyone would throw their money in and everyone would be wealthy and everyone would be rich and we'd live in a perfect world, which clearly, obviously, as we see, we don't. But when we take or get opportunities like this, we should be thankful for them and just take advantage of them. And just next time, all you have to do is prepare. If you watched any of my videos from August, I had already alluded to you guys and explained September is generally known as a bad month for trading in the stock market because things like this generally happen. Last year, September, we had a correction. I don't think it was a major one. I don't honestly remember. I don't remember them specifically because, again, you get used to them. You get used to them happening, and you just prep for them and game plan. If you ever watched any of the other YouTubers on YouTube, me, Kevin, is very well known for having some dry powder on the side. Again, another word for cash. And when corrections like this happens, he'll go in, spend 50, 60, $1 million on stocks and take advantage of the dips and then ride the waves up. Essentially, your game plan in the situations like this where we are in right now, you are waiting for this to find a floor. And essentially, the moment you see a string of green candles start to build or 2 green candles start to build, or where you can literally build a line of support and identify it clearly, that's your buy-in point. That's when you know you need to start hunting and you need to start looking for opportunities to throw your money in and watch it grow. Because this is how you build generational wealth, is taking advantage of opportunities like this. This should be like your number one go-to if you are ever wanting to grow your money fast. Because this is literally life giving you a chance of saying, here, I'm going to pull all these stocks down, put them on sale for you, pick whatever you want, any blue chip company you want, throw your money in and just watch it soar. Literally, that's it. But again, that's the SPY and that's the whole thing with the Evergrande. I'm sure you guys have seen articles on it. There are a lot of people on YouTube talking about it, so I'm not going to harp on it too much. What today's purpose of today's video was specifically was to kind of give an update on some of the plays I've been talking about recently. So if you watched any of my videos from Thursday, Friday, Saturday, or Sunday, I had mentioned plays and how I'm choosing to address this market. Specifically, I am not going long with exception to one play that I've decided to go long on outside of AMC and GME, okay? I've chosen instead to use my tools, specifically Unusual Whales, which is an option tracking tool, and go, I guess, playing options on specific plays based on things I find, right? So obviously I'm not going to really cover AMC and GME because we both know how those did today. I will cover BBIG because this play is super interesting. As you see from the chart, it did take a hit today, but not as big of a hit as I would have expected. To be honest, the chart was actually looking kind of nice towards the end. It started really spicy in the morning as you see this nice jump to the top side, almost hitting $8 and then correcting down and then essentially consolidating the rest of the day. How can we tell consolidation? Look at the MACD being respected both on top side and bottom side. No big harps or jumps, just the major one in the morning, and then after that it kind of settled down. Try to hug that center line through all the way through the rest of the day, telling you it's consolidating, building a floor. You add in Unusual Whales, my new favorite toy, I guess, if you will, and we'll default this to BBIG. And I have this defaulted to 50,000 premium or more, and check this out. 810,000, 960,000, 370. Look at the strike date, October 15th, October 15th. This strike date is being played heavily, and we're not talking pennies. This is a significant amount of money. $2.3 million, $2.3 million. Each one of these individual lines is someone putting this amount of money on a play for BBIG, which should only tell you one thing and one thing only, because this is a short squeeze play, that the short squeeze is still very much on and very much in play. Specifically, the strikes that they're playing the most, you have the 3.5, the 4, the 5, the 7.5, the 11, and I think this is the 20. Yeah, and the 20 strike. These are the main, I guess, 5 or 6 major strikes that money is going into. Heavy though on this 3.5, 3, and 4. Like, that's a significant amount of money going into this. As I mentioned, this is for the October 15th. As you can see, left side is bulls, right side is bears. Bears, the highest is also October 15th, as obviously you would expect, because so many people are playing the calls. But this, to me, is super bullish. And it makes me very happy that about a week and a half ago is when I picked up my calls for BBIG, because I'm going to hold those, and ain't nothing going to make me sell those. But I think you guys get the point. This is BBIG. Let's see, what else did we want to cover? Beyond, I made a video for Beyond Meat on Sunday. It was a shorter video, I promise. I'm trying to make my videos shorter for you guys, because I know I can rant on forever. I can't ever shut up, but I'm trying. I'm working on it, I promise. Zoom video, I made a video on this on Friday afternoon. Blink was included in that as well. So was SPCE, was on Saturday's video, along with FCell. And then the one position that I am super long on, and am going to hold for a long time, and was actually pretty surprised. It was actually green on the day today. Hippo, our AI insurance company, right? We had talked about UiPath, which was our AI mortgage company. Well, check out our AI insurance company, also going green on the day, and actually fighting back against this crazy market. Well, what do you need along with mortgages? You need insurance for those homes. So to me, that is a pretty good enough idea for me. I do want to hold this for a long time. As I said, my exposure is not a lot. 100 shares is essentially $500. I mean, I'm willing to put that in play any day and twice on Sunday. The other play I wanted to mention on today's video was Smile Direct Club. Smile Direct Club. This is the chart. So we did have a nice spike in the beginning of the day, and I'll talk a little bit more about this. I did check the flow on this play as well, because I saw a lot of chatter on Twitter about this, and Reddit, and a couple of the Discords that I'm a member of had a lot of people talking about this. I'm like, what the hell's all the fuss? So I checked the flow, and as you guys can see, again, 116,000, 72, 763, but check out the strike, $14 strike. We are sitting at $6. I mean, that's super bullish to me. 52,000, 132, 61, 126. So once I saw this, it gave me conviction to go digging a little deeper to one of my other favorite tools, which, if you guys have watched any of my videos, Lucid Tracking does have a meme section specifically for anything short. So I went in here, started looking, and we can default search for it. SDC, Smile Direct Club, and as you see, ranked number 19. 34.2 million shares short off of 104 million share float. So that float, first of all, is not that big compared to other companies, as you guys can clearly see. AMC is 513 million. 104 is nothing. 34 million, though, of that is a significant amount, which makes this short squeeze play ranked high on my list, if you ask me, number 1. But again, once I saw that, I was a player specifically for the October 15th strike date. So October 15th, as you see here, I did go with these $73, $76 calls, making 41 cents for every dollar essentially that Smile Direct Club does go up. And I felt that was a good deal for this price. Again, that's me. This is not financial advice. You are more than welcome to do with your money anything you choose. I'm simply trying to show you how in a volatile market, especially like we are now, what I'm choosing to do with my money. I'm no longer or not going to be opening long positions. I'm strictly going to stick to option plays short term, which means 60 days or less, 30 days or less, or potentially even weeklies. Not too much on the weeklies outside of Zoom. And I gave my explanation on Zoom. If you didn't see that video, please watch it. It'll give you a better understanding why and what I saw and what gave me the conviction to play that on a weekly strike. But again, I think you guys get the point. I wanted to make these videos a little different. I did make this watch list just defaulted for things that I talk about on YouTube. For you guys to see. If there is something you guys want me to talk about specifically, or you want me to do a video about, please just drop it in the comments below. I'll be more than happy to analyze it, read the chart for you, and maybe put it on a video if you'd like to see it that way. As always, guys, likes, comments, subscriptions, shares are always so much appreciated because it does help with the channel's growth. Again, I am a relatively new channel. This officially is video 38 for those of you that don't know. So again, I'm trying to improve day by day because again, I don't have a quitter's mentality. I have a winner's mentality, which means I don't know when to quit, essentially. But again, I think you guys get the point. Always remember, you can hit me up on Twitter and IG as well. And then I will leave it at that, guys. I will catch you guys in the next one.